Hi guys, it's been a while. I don't know when was the last time I've recorded a video. Unfortunately, I was recording a video and it took around 20 minutes and I was about to finish what I was going, I was about to finish everything, but then it cut off and until I realized I need the premium subscription to record for a full hour, which I didn't really need an hour, but I'm just going to, by the title, just show you a better way to look for confirmation. In other words, if you are a supply or demand trader, which if you look at my profile, I am a supply and demand trader mainly. I've been trading supply and demand for a long time, probably 4 years. And to be completely honest with you, I've never really found consistent profitability from it. As a matter of fact, it's more so because I was making mistakes because of my trading psychology than the actual strategy. However, at the same time, I didn't really fully believe in it, and I feel like for you to succeed in this business, you have to believe in what you're doing. Because if you don't believe in your analysis, it's going to be really hard for you to follow your plan and just enter the trade considering it's an edge and you don't know when the next winner is going to be and when the next loser is going to be. It's a game of probabilities. So all I'm going to show you guys is, usually you already seen the drawing there. That's from the previous video that was cancelled. Anyways, usually, guys, if you're a supplier demand trader or a support and resistance, I mean, I can talk about that later as well. But let's just start with supply and demand. I mean, supply and demand is all it is you get the rally-based rally, and then that's boom, a demand. And then you just wait for price to come back here and then you buy. Okay. It's as simple as that. And I'm gonna show you this because I'm gonna compare it in a second to the way I enter nowadays, which this is how I would have entered 3 years ago, which I think it's actually not bad. It's about 3 hours. If let's just say you're aiming for this high right here, 3 hours and happy days. It would have been a good trade, I would say, a good buy. Okay. However, if I'm to just move this right here, okay, right here, I don't think this would have been a good buy, to be honest, because the base, first of all, the demands on your marking. I mean, if you know supply and demand in a more technical and more in-depth um, in more in depth than most others, and you've been trading it for a while, you would know that this base or this demand zone is not a high quality demand zone, and you probably wouldn't trade it. But if you're a novice and you're just learning supply and demand right now, you would probably mark it as a demand because there's a nice leg out, and price just came back in. You see a bullish engulfing, and by the way, I mean, even if you're aiming for one to one, I'm sure, even if you're aiming for one to one, which usually you wouldn't in a supply and demand, probably you would aim for like one to two at least. But even if you're aiming for one to one, that would have been an L. So you would have went 0.5 hours in profits. And by the way, that's very common. I still remember, I still have my trading journal right here. Excuse me. I still have it right here. Where I would set like this. I would not wait for a confirmation, and then price would just keep going down like a falling knife, and then I just take another L. Even though, as you know, by the way, supply and demand is, the smartest way. Some people also call it smart money concepts. That's also how you learn supply and demand, by the way, where they teach you supply and they teach you demand, and you're basically trading with the banks. No, you're not. You're really not. So let's just leave the banks to the side here, and I'm just gonna dive into it because I've been going about 4 minutes supply and demand, and you know it's same thing. I'm just gonna do this really quickly. If you're a support and resistance trader and you don't trade supply and demand, higher time frame POI because it's 4 hours. Um, Same thing here. Okay, short resistance. Okay, capital A. It's a nice capital A, and you get the second movement here as well. Now, there's probably a million ways you could learn support and resistance because most retail traders learn support and resistance, but I learned it in danger zones, second movements, capital A's, capital V's. Actually, much easier than supply and demand and much less technical. You don't really have to learn about the base, originality and all that bullshit, and bases, demand zones, and drop based drop supply zones. So it's much simpler to learn support and resistance. And to be honest with you, I use it more than supply and demand right now. Um, but I still use supply and demand. However, long story short, if you are doing the same thing with the support and resistance point of view, you would set here, and for you to take 1 to 2, I mean, that is 1 to 2 to be honest, but I don't know if we'd have hit TP. However, let's just say you put the stop loss a little bit above, okay? Because that's how most people learn it. And that's the 2 right here. You would have went like 1.5 hours and then price would have reversed on you. And as you can see, it hit stop loss. So what I was explaining in those 20 minutes that TradingView decided to delete, and I went into drawing my entry, and then I went into step 2, and then step 1. I was going actually backwards. But what I learned first of all is QMR, and all it is it's fairly simple. It's very very easy to learn, and to go down to level 1 and from the basics, all I drew is the trend and what we label them as. So you get the low, you get the high, you get the lower high, you get the higher high, then the lower high, then the higher high, and then the lower high, and then the higher high. And then what happens here is the previous lower high breaks, and then you get higher high, lower low, and then lower high, lower low. Now I'm not labeling them just because I don't want to spend so much time labeling them. Feel free to skip actually, but I feel like it's best if I label them. So low, high, let's see, higher high, lower high, and then okay, and then again, I forgot, higher high, and then you're getting the lower low. Guys, very simple, very easy. If you've watched one YouTube video about trading, you've probably seen this before. And then when you get the higher high, you get in the lower low, and then you get in the QMR. You get in the QMR in play. So the QMR is Quasimodo reversal. That's what it stands for. And Quasimodo is simply this guy right here. It's a movie character, an ugly one, where his back is arched like this. And I don't know who named this. I don't know which legend decided to call this Quasimodo, but I mean, you can see it sort of goes in a bend like this, okay? And it's usually how, when you get the lower low, breaking the previous lower high, that's when you can anticipate a change in trend. And that is the last step. That's usually how I find my entries. So my entries would be basically trading. If you trade head and shoulders, you're basically trading the right shoulder, but not exactly. I will explain in a second. I'm just going to go into step 2. Now, step 2, and it's basically before I start looking for this, I really would need to see, now this is a sell QMR, okay, Quasimodo reversal. And the reason why it's called Quasimodo reversal is simply because the price was in an uptrend, and then you're trading the reversal of the downtrend, which is how I usually enter when price is approaching a supply or demand level, a support or a resistance level. I look for the reversal when it presents itself. I'm hoping I'm making sense here. I'm trying really to do this within 20 minutes or even less. So guys, if you like this video, please boost it and just let me know down in the comments that you want to learn more. If I get a few comments, I'll probably make another video and actually backtest gold, showing you how it works on gold even better. I wanted to show you CHF JPY today because it's actually nicer and cleaner. Gold is a bit more choppy, as you know. So yeah, but just let me know in the comments. Either way, step 2 is fairly simple. It's price action. So all you look for is hammer candles, shooting stars, bullish engulfings or bearish engulfings. Bullish engulfings / bearish engulfings. That's what these two stand for, okay? So just memorize these for the rest of the video. If you find it, of course, useful and you feel like you want to use this and try it, just memorize these two things, BUE and BEE. Okay, step 1 is monitoring the level. Now, this is this is now where I'm just gonna go back in reverse and go back to step three. But the reason why I went step three back to step one is just because we started talking about entries. And for a long time, trading supply and demand, like I said, I've been just setting at the start or at the moment that the price touches the supply or demand level, and I would just put my stop loss below or above the supply or demand level, of course, and then just let it run. And it may work sometimes when the supply or the demand zone is high or low, or too high or too low on the chart, or if it's a weekly supply zone or a daily supply zone, like in the higher curve, it will like work. It's not, I'm not saying it won't work. You can set and forget. But most times I realize price either shoots straight up or goes straight down through a demand zone. So I started calling a supply or demand zone, or a support or a resistance zone, or like a double Marubozu zone if you use these as well. I use all four or five. I started calling them monitoring level, or a POI, higher time frame POI. Okay, so a higher time frame POI, all this means is you're only you're only gonna wait for price to get there. That is the most messed up uptrend, but you're gonna wait for the price to get there and wait. Okay, you just wait. Now, if price shoots straight through it, you haven't lost any money because you were just monitoring the level. I feel like support and resistance traders, they would understand this a lot better, because I believe most of them trade confirmation. But supply and demand zones, this is going to sound very new to them because they're used to like just selling the supply or demand zone, because they would think that they're selling with the banks, which is bullshit. But yeah, I'm not saying in general whoever said supply and demand is the best is a fraud, but maybe it is how banks trade. I don't know, but I don't really believe so, because sometimes you just see price shoot straight through really good demand or supply levels. Either way, if price breaks through it, then you didn't lose anything. You were monitoring a level and it's smashed, so you look for another level. If price tapped and then created a, I don't know, let's just do this, a bearish engulfing, so it's breaking the previous candle right here, that's when you look for step three. Okay, so that's step two right here. So step one is monitoring the level. Step two is looking for the price action that you want to see, which is a bearish engulfing in this instance, or a bullish engulfing if it was, another, if it was, the other way around. But you're getting the point. So step two, simple as a bearish or a bullish engulfing, like the one that I showed you, because then that confirms that the bigger players, I'm not going to call them banks, but the bigger players are selling. The guys with more money than me and you, they actually entered the market, they like this level, and they're selling. And when they're selling to the point that they're breaking the previous lower high, that means they're taking out buyers out of this market. So that's why in step three, you're waiting for this lower high to break. And this is typically called change of character in smart money concepts, because it's changing the whole trend. So this is what they call change of character, which I learned about. However, I enter with the Quasimodo reversal. So you could see this arch right here, just like my guy's back right here is arched. So that's all it is. Your entry is simply short right here, and you put the stop loss above the head. Okay, and that is all it is. Typically, guys, you would get a good RR from this. Now I'm just gonna go and yeah, I'm just gonna go to the next chart and show you. Okay, now a few things I was writing here, which took me too long. I only have 5 minutes, so I need to be fairly quick. But like I said, if you like this video, let me know, and then we will go from there. So this is the level that I was monitoring in red. Okay, I really use two rectangles mainly. One in red is the monitoring level, One in blue is in the step 3, just like you've seen. It's the level I'm looking to enter from. So the lower time frame point of interest. Okay. And here I'm using double Marubozu. Okay, so I'm not using supply or demand. I'm not using support or resistance. But the next example is a demand. Okay, so we'll go one by one. One thing I want to say is here. So step 1, you're getting this downtrend, and then you have this level right here, this double Marubozu. Here you want to be very careful. So if your monitoring level, if you read 1 or 2 time frames below your monitoring time frame, what I was typing here is, I don't want it to be fairly confusing, but I have to do this quickly. If you're monitoring on the daily, you look for the confirmation. Step 2 has to be 1 to 2 time frames below. So daily, 1 to 2 is H4, H1. Okay, you don't use H6, you don't use H8. Hour, 4 hours or 1 hour, these 2 time frames. And then the entry 1 to 2 or 3 below the confirmation. So if it's H4, then you look for hourly, 30 minutes, 15 minutes. If it's H1, you look for 15 minutes, 5 minutes, not 1 minute. Don't go 1 minute, it's too much. So 5 minutes, you don't want to go below it. But sometimes if it's an hourly bullish engulfing, you can also enter on an hourly QMR. Okay. If it's a 30-minute bullish engulfing, you can enter on the 30-minute QMR. That's not a problem. And that's actually the example here. So you have this bullish engulfing right here on the, I believe it's 30 minutes it was. I can't really remember, but there it is. So step 1 is the QMR. Step 2, you wait and see how the price reacted. Now, I only have 3 minutes. I have to hurry up. The bullish engulfing, you can see right here, it takes out the bearish red candle and the body closes above the red candle. And that's step 2 done. That's all you need. Price action is showing you that buyers entered the market. Step 3 is fairly simple. I drew it right here. Like I said, high, low, higher low, lower low, higher low, lower low, higher low, lower low, and then you get the higher high. That's the break of trend right here. High, low, you can say high, lower low, or sorry, higher low, lower low, higher low, lower low. I messed this up, but either way, high, low, higher low, lower low right here. And then you get in the higher high, okay? So just so I draw it on the price, I'm just seeing, you can see this level right here, okay? And then you get in the lower high here, then the next lower low. I should have just done this from the start instead of just spamming higher highs and higher lows and wrapping. But yeah, then you're getting the break of the previous lower high, and you can see the body of the candle closed above, and then the entry is like a right shoulder, okay? And that's the entry, guys. Let me just draw this. It's fairly simple. By the way, this is on YouTube, not my YouTube channel, but you can just Google it, QMR, and then you will learn more about it. You can see how price went, and that's how you get the confirmation, okay? Now, I only have 1 minute, so I'm just gonna show you fairly quickly the next one. The next one should be easier because you're getting you're getting this demand zone, and then from the demand zone, you get the hourly bullish engulfing. You can see it, hourly bullish engulfing. And then 1 to 2 time frames below, guys, it's fairly simple. 1 to 2 time frames below, you get the QMR. You can see high, low, higher low, lower low, higher low, lower low. Let me just draw it again. I have less than a minute. Here, 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 and then you get the higher high here, breaking 2 highs, actually not just 1 high, and then eventually price touches and then leaves. And here, guys, is just a quick idea, just to put it into perspective. If you had traded the supply and demand zone, demand zone, you would have got 3 hours. With this QMR entry, 15 hours. I hope you liked this video. I have 20 seconds left, so I'm just gonna say this. If you like what you saw and you want me to show you other models of how I enter, because QMR is not the only one, just let me know, boost this, comment. I hope it made sense. I'm sorry it's rushed, but thank you for watching.